What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we see a continuation of the selling, and we're getting close to a very critical support level. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, also just a quick note, with the holiday season, I'm not sure if I'm going to be making a video every day this week, but if we start getting a very volatile market, I'll do my best to make a daily update. So first up, looking at SPY, we can see we are down just over 1% today, and we're getting very close to that critical support level at 450. Remember, the only support level on SPY that matters right now will be 450 because price action has to stay above 450 to maintain the bull market. Remember, we're talking about a macro level bull market, and real quick, we'll look at a weekly chart, and you can see that we still have this bull trend and we're still above this critical support level on this weekly chart. Now, in order to maintain the bull market, we will need to maintain this bull trend and this critical level of support on this weekly chart. So when we look at the daily chart, we can see we're losing the bull trend and price action is looking very choppy, and we're basically just going sideways, and we're now trading at prices we saw back in October. So the stock market is chopping around and going sideways, trying to decide where it's going to go next. And the one reason you have to be very cautious at 450, because if price action breaks below that level, it's very likely we're coming all the way down here to close these gaps. So below 450, you're looking for gap closing prices at 447, 442, and 436. That's where our next very critical support trend line will be. So if we break below 450, we could very easily see SPY coming all the way down to 430 and possibly even lower. Now, don't just assume that we have to see price action breaking below 450. Make the market prove it to you, and that's why you want to wait for price action at that level to see exactly what happens. Remember, if you're going long and you're trading long positions off of that support level and that support level does hold up, you just basically caught the bottom and you have great risk reward ratios. For that reason, there will be a lot of buying pressure to offset a lot of the selling pressure. So don't be surprised if we see this macro level bull market continue to trend higher. That would be a great entry, and a lot of people are just waiting to load up long positions at SPY 450. And remember, the last time we hit that level, we had a very impulsive rally. So this is a second attempt at that level, and it could be a very critical double bottom, and it could be a very impulsive rally off of that support level at 450. So that is a very critical level, and I want you to write that level down and watch it like a hawk, and make sure you're watching to see if price action is bouncing off of that level or breaking below that level. Below SPY 450, you're getting a lot more bearish, and you're looking for prices all the way down to about 436. And above 450, it's still possible we're going back up higher to fill these gaps and potentially going back into another bull cycle, which could carry us over into next year. Remember, the Santa Claus rally is the last week of December and the first few days of January, and we're seeing selling going into this week, which could easily set up the possibility we're going to see a very impulsive Santa Claus rally to finish out the year. Now, you'll know you're not likely getting the Santa Claus rally if we break below 450, and this would be somewhat of a double top look if we break below that neckline. So below 450, you need to be a lot more bearish, and above 450, you can still stay bullish from the macro level trend. That is a very critical level, and you'll know exactly what to do depending on if we hold up above that level or break down below it. Jumping over to the NASDAQ 100 triple Qs, you can also see we were down about 1% today, and we are holding above that support level right around 379. Now, the triple Qs are starting to close to a new low, so we're definitely seeing a weak tech sector, and we don't have a bull trend or a bear trend. So right now, the triple Q's critical support level is right around 379, 374, and right around 370. If we start breaking all of these support levels, you can see there is a gap down here that we're very likely going to fill right around 360. So just like on SPY, you need to watch these critical support levels. And if you're taking long trades, you need to understand that you could see prices going all the way down to these much lower gap fills if we do lose these critical supports. If you're trading for the long term and you're comfortable holding those positions, that's absolutely no reason to panic sell, because we are more than likely just going to see a full-blown correction, and usually you will continue the macro level trend, which is still bullish. Just like I showed you on SPY, you can clearly see the triple Qs are still sitting on top of critical support and still holding that bull trend on the weekly chart. So don't just assume that this bull market is just going to roll over and die easily. We can still chop around and trade sideways around this support level, but if we do start losing that critical support, you want to go back to the daily chart and you want to watch that gap fill down there at 360 if we start closing below the 370s. Now, right now, you can clearly see we're starting to look a lot weaker with price action below the 50 EMA for the third day in a row. So when you have price action below the 50 EMA and you're not willing to hold your positions for the long term, your best bet is to wait for price action to break back above that critical level. So the 50 EMA resistance level is right around 387, and we really need to get back above this resistance trend line, which is right around 395, to get back on that full bull trend. So right now this will continue to be a choppy market that's going to continue to go sideways, and we're about to see a battle between the bears and the bulls at these critical support levels to see if we're going much lower or we're going to bounce from here and regain those bull trends on the daily chart. Jumping over to the Dow Jones, you can see the Dow Jones looks like an absolute mess of gaps, and we now have 2 gaps above. The Dow Jones was down around 1.23% and held up above that support level right around 349. There's a gap above the fill at 352 and 358, and the critical resistance is getting back over that 50 EMA, which is right around 354. Now on the Dow Jones, the critical support levels will be down here right around 344, 341, and 338. If we start losing these critical support levels, we're going to see much lower prices, but the possibility of filling these gaps above first is still highly likely. So look at these gaps at 352 and 358 with strong resistance at 354. If we start closing these gaps and continue to break through the resistance level right around 361, we could easily go back into another bull cycle, so don't rule it out. On the Russell 2000, we were down 1.4% today, and we do see the confirmation that the Russell 2000 is breaking down below that level at 213 with 2 daily price action closes below that level now. We closed below there on 1216, and now we're closing below there again, so it does mean we could be coming back down to about 207 or 205. At that point, I think we're due for a bearish relief rally because it's clearly a bear market in the Russell 2000 with the full bear trend and the bearish price action. That bear relief rally could easily take us up here to close the gap at 228 with resistance on the way at 220 and the 50 EMA right around 224. So watch those critical resistance levels, and remember that a bearish relief rally is very impulsive. Don't confuse it for a bull market because the Russell 2000 is clearly looking very weak, and we need to break all the way back above 232 and 234 to start thinking the Russell 2000 could be going back into another bull market. So as long as we're below 232 and 234, it's more than likely just a bearish relief rally to close the gap before we continue to see another leg lower. On the Arkk ETF, we were down just over 2.5% today, and we see Arkk closing right on top of support right around 94. Remember, there's still the possibility this is going to be a double bottom off of 90, but we need to break out above this neckline right around 103 and start closing back above 107. Don't forget, Arkk is still in a full bear trend with bearish price action, and we could still be seeing another leg lower going down to 85 and possibly even 81. We're still below the resistance trend line, so even though we did see a very bullish candle on Friday, we still did not break out above resistance. So don't get faked out, this is still a very bearish looking chart until we can get back above about 103. So as long as Arkk is in a strong bear trend, you can continue to short it at resistance and watch for that very critical level at 90 and 85. On the VIX today, we were up just over 5.9%, and the VIX did close back above 20 yet again, closing at 22.8. So the VIX did close that gap above, which I told you was likely going to be the next buying opportunity, and that is what we did see today. So the question from here is whether or not the VIX continues to trend higher or gets crushed back down below 20. If we see the VIX getting back down below 20 yet again, this was all likely just a pullback from the all-time high, and we saw SPY coming down around 5%, which is completely textbook for the stock market this year. So if we see the VIX getting back down below 20, look for a continuation of the bull rally. However, while the VIX is above 20, you need to stay cautious, and if the VIX starts closing back above 25, we're very likely going through that full-blown correction, which can take SPY much lower, all the way down to about 430 to 436. So be very cautious and watch the VIX closely because it will help you understand what to expect in the stock market. On Bitcoin, we're currently up 0.65% today, and overall we see Bitcoin holding up pretty well at the support level right around 46,000. Remember, if we were going to see the stock market absolutely crash and go through a full-blown correction, we would probably see Bitcoin losing the support level as well. So you could use Bitcoin as a risk-on, risk-off sentiment, and if we see Bitcoin breaking down below 44,000, we're more than likely going to see a lot of risk-off sentiment in the stock market as well. But right now, it looks like Bitcoin could be building a strong base of support down here, and as long as we're trading above 44,000, we still have the possibility to break out above this resistance level right around 50,000. If we can break above that and close back above 53,000, we should be back over the 50 EMA, and we could see Bitcoin trying to go to another bull cycle. However, you can clearly see Bitcoin is in a strong bear trend, and price action is still being contained below all the moving averages. So when you see a strong bear trend and weak price action, you still need to be very cautious because you could still lose this support level and see much lower prices. So as long as Bitcoin is staying above this 44,000 support level, you could try to accumulate a long position down here. but just be prepared for a lot more downside if we lose that support and start failing to hold above 42,000 and 39,000. If we start breaking below 39,000, it's going to look extremely bearish in Bitcoin, and we could be going all the way down to 30,000 or lower. On Amazon, we were down 1.73% today, and we still see Amazon bouncing off of that support level right around 33.11. We're building up a lot of bearish momentum, and we're almost in a full bear trend if we continue to go much lower. So if Amazon breaks below 33.11, look for support at 32.40 and 31.85. But we need to see Amazon breaking back above this support trend line, which is now going to be resistance right around 34.50. If Amazon could get back above 34.50, it could prevent the bear trend, and we could see another bull cycle if we get a breakout back above 35.40. So keep in mind that you have to be very cautious on these stocks while they're below their 50 EMA, because they could be going into bear markets and they could be developing a bearish trend. So right now, watch these very critical support levels and be prepared to buy much lower if these support levels do fail. On Tesla stock, we were down 3.5% today, and we did fully close that gap and test that support level at $900. So Tesla is at a very critical support level at 900, because if we lose that support level, we're more than likely going to close this gap at 843. So Tesla below 900 could be a short trade to close the gap at 843, but as long as this support level is holding up, there's still the possibility we see a bounce and an attempt to retest the 50 EMA, which is currently right around 991. If we can see Tesla breaking back above the 990s, we'll still have resistance right around 1,000. And above 1,000, we could attempt to break out of the resistance trend line, which is right around 1,100. So right now, you need to be very cautious on Tesla stock, because if we lose this support at 900, we should have a quick trip down to 843. If we start to bounce and break through some resistance and start forming higher highs and higher lows, then you can start to get more bullish. But right now, we see lower lows and lower highs, and we're starting to develop a bear trend. So you need to be very cautious as a Tesla bull. On Apple stock, we were down 0.81% today, and we did see Apple testing that very critical support level at the 20 simple moving average, and we did see a bounce off of that level at 168. We also closed that gap, which was also in that same support level, and we still see Apple looking very strong with the very strong bull trend and the price action bouncing off critical support. So what we could see from here is Apple trying to break out to another leg higher, or starting to consolidate and start forming a bull flag from here. Either way, it's still going to be bullish consolidation or a bullish breakout, or we're going to see price action slicing through this support, and we're more than likely coming all the way back down to the 50 EMA, which will be right around 160. So watch that critical support at 168, because if we break below that, we're more than likely coming back down to about 162 to 160. If we can break out yet again and get back above 176 and break out from the previous all-time high at 179, the price target we're still looking for is all the way up there near 188. So don't rule out the possibility that Apple stock is still bullish while it has a bullish price action and the strong bull trend. The financial sector was down 2.41% today, and we did open yet another gap above. Right now, the financial sector is in a full bear trend, so it's definitely looking a lot weaker from here, which is very surprising considering the fact that the financial sector was very close to a bullish breakout just a few days ago. So this is clearly a very volatile and whipsawing market, and the financial sector is currently taking a beating. If the financials break down from here, it could be very bearish for the S&P 500, and it could put a lot of downward pressure in SPY. On the industrial sector, we also had a huge gap down open, and we see another very large gap above, as we did get the full bear trend today. So the industrials are looking very weak, right up there with the financials, which is definitely going to put a lot of downward pressure on SPY as well. We need to see the industrials closing back above the 50 EMA to start reversing the bear trend. The healthcare sector was down about 1% today, and we did see a strong bounce off of that 13 EMA, and we still see a very strong bull trend. So the healthcare sector is still looking very strong, which will help SPY hold up above support. The energy sector was down 2.5% today, and we definitely see a lot of bearish momentum, and we're very close to having the full bear trend. We see lower highs and lower lows, and we see the energy sector looking like it's starting to roll over and getting ready to go through a bear market. So jumping back over to the S&P 500, don't forget to watch this very critical support level. It's going to tell you whether we maintain the macro level bull market, or we start to see that full-blown correction and lose the bull trend in the macro scale. If we lose the bull trend, you need to get a lot more cautious, because the stock market could continue to correct and we could go much lower. Don't forget, in a fearful market, it's usually the best time to get greedy, so don't rule out the possibility that this bull market does not roll over and die and we bounce off this critical support. This is a great risk-reward ratio, and if you're wrong, you could take a small loss, lick your wounds, and move on. So don't be reckless buying the dip uncontrollably, know your critical levels, and scale in accordingly. And if you need to reverse course and take a loss on that position because it starts to turn south, then be prepared to do so. But overall, I still think this is a strong bull market on a macro scale, and we're still sitting above a very strong support trend line. So when you start to see a market that's panicking and it's still in a bull trend, that's usually going to be the opportunity to buy the dip. It's not always the case, and eventually the trend will end, but we don't know when the trend will end because we're not in the business of calling a top. So yes, this could be a top and we could be going through a very large correction and possibly even a bear market, but we won't know that until we see it in the price action and trend. And so far, we just see a choppy market that's just consolidating and going sideways. If we lose critical support, that will be a very different story. So continue to watch that very critical support level at SPY 450. Also, don't forget that I do have bank trade alerts, which sends you all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. If you're interested in joining Bank Trade Alerts, you can find out how to join and more details about what Bank Trade Alerts is by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you want to join the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.